You're welcome back, traders. In this video, we are diving into one of the most important aspects of smart money trading, and that is liquidity sweeps and inducements. Okay, if you have ever wondered why the market always seems to hit your stop loss before moving in your original direction, then this video is going to give you the clarity that you need. All right. So, what exactly are liquidity sweeps? We need to understand this concept and understand it properly. Liquidity sweeps occur when the market pushes into key levels, usually above highs or below lows, to trigger stop loss orders and then reverses back in the original direction. All right. So these stops are not random. They are liquidity pools that market makers and institutions target to fill orders. So think of it like fishing, right? Retail traders are the bait and the institutions are fishing for their stops. I'm just trying to find a good example. That's why I'm running through the chart. Okay. So once the smart money, once the big guys collect enough liquidity, the market often reverses and moves strongly in the intended direction. I think I found a valid example around here because we kind of have a support zone around here, right? You can see we actually have a demand zone around here, right? And then if you see what happened here, price went well below this zone. It was not just a very small move. Price actually went well below this zone. You can see this is a zone where price was always rejected and going back upward. And price went well below this zone. But guess what? Those who jumped into this thinking it was a breakout, they would have gotten stopped out. They would have gotten stopped out because shortly afterwards, after liquidity has been grabbed, the price went back up. You can see it even continued to respect this level. This is quite funny, right? You can see that, look closely. Price actually respected this level again, something that seemed to be a breakout. But guess what? Price came back, respected it, came back, respected it again, showing that this level was still a valid support level. So this was obviously a false breakout because this level was still valid for the fact that price was still respected two times. Price still respected it two times. Now, after liquidity was grabbed, you can see that the price went up, and this was a continuous uptrend up till now. As you can see, this was actually a continuous uptrend up till now. So those who would have entered a sell thinking this was a breakout, they would have gotten stopped out. Or those who would have set their stop loss just below this support zone, they would have gotten stopped out as well. Okay. So liquidity sweeps occur when the market pushes into key levels like support levels or resistance levels. And then after it pushes into those levels, stops are triggered. All right. Stops are triggered. Now, what are inducements? Inducements are setups that entice traders into the market too early. For example, let's say price forms a clean breakout structure that looks like a strong trade signal, but in reality, it's designed to attract retail entries so that institutions can gain liquidity before making the true move. Okay, so this kind of just looks like deception. You might actually find, okay, this one here, we had a gap in this situation, we had a gap here. Then in this one, we even had something that looked like a breakout and retest structure. If you look closely, we had a breakout and a retest and a continuation. This was actually, this actually looked legit. All right. I believe, perhaps a lot of traders might have fallen, victim for this because we had a breakout, we had a retest, and, a continuation. that did not last for long. But if you had entered after this evening star formed, yeah, if you had entered after this evening star formed, and maybe you had set your stop loss above the evening star pattern, and then maybe you targeted what we're going to use as our reference point now. um let's say if you are a scalper and maybe you just targeted a risk to reward of 1 to 1, then you would have actually benefited from this move. But if you are targeting 1 to 2, as you can see, if it was 1 to 2, the price wouldn't have even reached your stop loss. Sorry, take profit. The price wouldn't have even reached your take profit before it's pushed back upward. And you can see how this candle was massive, showing significant impulsive move here, right? So that is actually that about that, right? So yes, inducement tries to entice traders into the market too early, but in reality, that setup is designed to attract retail traders so that institutions can gain liquidity before making the true move. So these inducements often occur just before a liquidity sweep, right? Making them a dangerous trap for the untrained eye. Now, to master liquidity sweeps, you first need to identify liquidity pools. Okay, liquidity pools are areas on the chart where a large number of orders are likely sitting. These are usually found above significant swing highs or below swing lows. Okay, and you can also find them around psychological levels and near obvious breakout points. So we can classify liquidity as internal, which is within the range of current price action, or external, which is outside the most recent highs and lows. Understanding this distinction can help you anticipate where price is headed next. Now, liquidity sweeps and inducements do not happen randomly. Okay, they are often part of a larger market structure. This means you need to read the overall price action, to see where we are in the cycle, whether it's accumulation, manipulation, or distribution. Timing is key because liquidity sweeps often occur before major news events, or maybe during key sessions like London and New York, or before a big directional push. So if you can spot these setups early, you'll stop being the liquidity and start trading with the liquidity. Okay, so that is the difference between being on the retail side of the market and aligning yourself with institutional flow. If this lesson helped you, hit that like button and subscribe so you never miss another smart money breakdown. Turn on notifications and let us keep growing together as traders. Thank you for watching. I look forward to seeing you in the next video. Happy trading.